Hey, welcome back. Thanks for tuning in. As always, it's really great to see it. It's kind of a rainy morning, so we're here in downtown Purcellville shooting this week's video, and we're just getting out of the announcement, the CPI announcement that was just released a little while ago. Denise, it kind of reminds me of the guests that come for the weekend and they never leave.
He's talking about inflation in case you missed that. So the consumer price index came out early this morning and it is at 3.4%. That's our new inflation rate, and it's only down 0.1% from the end of March. So it's not exactly where we want it to be, but at least it's not going up.
Yeah,
Is how I see it, right?
it's not going up because it did, of course. The last time we reported this, it had gone up, what, 0.4?
Right.
So at least now it's kind of come
Just
down.
1
Yeah,
point. It's still
little
not
smidge.
where we want it to be. And so most experts, based on that, are predicting that more than likely mortgage interest rates will not change. So we're seeing again the range is 6.8 to 7.2, 7.3%. So just expect that for a little longer.
Yeah, of course, the social media and all the news outlets were very much abuzz yesterday. There was also the producers price index that was released yesterday, and that too was higher, substantially higher than they expected. And of course, the producer price index has a lot to do then, of course, with the consumer price index as consumers purchase those goods, of course. And I think overall, the feeling as I listened to a couple of interviews and my buddy Kai Rizdal, of course, on NPR's Marketplace last evening, the feeling I think that you get is that Jerome Powell, of course, the Fed chair, is in a speech yesterday that he made to a group of bankers, was that there's still optimism there. There's still the belief that a lot of the policies they've been putting in place have had a positive impact on inflation, but we're nowhere near that famous 2%. And I heard, just kind of ironically, I heard another report yesterday with regard to just the consumers overall and the feeling. I mean, still spending money. What credit card debt, I heard again this morning, is the highest that it's ever been. I mean, the number that was thrown out this morning is that it's in excess of $1 trillion of consumer debt in credit cards. So the feeling is that perhaps credit card use is up to try to maintain that level of lifestyle, even though the prices are going up, and that a lot of the consumers feel like their salaries, right, their income is not matching the inflation, but we're going to try to maintain a lifestyle that we've created when, interest rates were lower.
Bottom line, the fact that that inflation is going up, which means the cost of goods and services are still high, but people are still spending the money to get what they want, is telling them you can afford it. Yeah. You can afford it. But you bring up a good point, which is we can't afford it, but we're putting it on credit cards and getting loans.
Our level of expectation has risen as money was inexpensive, 2 years ago, certainly a year and a half ago. Certainly money was much less expensive, so we create that lifestyle. And it sounds to be, from what we're seeing and what we're hearing, as the consumers have tried to maintain that lifestyle. And I think, with regard to interest rates and the impact, we're still seeing that buyers are out in the marketplace looking, kind of hungry for that inventory. But as you pointed out, I think a great observation this morning, they're looking for a product that kind of matches their expectations. And that means that I think properties that are going on the market, while there's still short inventory in many of the areas, neighborhoods, zip codes that we've been talking about, that inventory needs to be in fantastic condition, because the mindset of the buyer these days tends to be that we want to look at properties that kind of wow us when we come in the front door, that we don't have to do a lot of work to, a lot of preparation. We don't need to solve somebody else's problems. When we purchase, we really want it to be kind of a turnkey gem, right?
Yep. In the housing market, what we're seeing is that inventory is still low. So when you look at the numbers, it's still a seller's market. However, the sentiment, the feeling that you're getting working with buyers is that they're not just buying because they have to buy.
Yeah.
They also want to make sure that if I'm going to be paying $4,000 a month in the mortgage payment because of a 7%
It's got to be
interest rate,
special, right?
it's got to be good. And even if I have to buy, I want to get as much out of that seller that I could possibly get. So homes being in really good conditions are the ones that you're getting those multiple offers on. The other ones that could do with a little work, you're seeing buyers being a little bit more picky. And I think it's a direct result of that 7%.
Yeah, I agree with you, because we're starting to see that even during, we're now starting to see these home inspection contingencies come back into offers, and that the buyers during those home inspections are being a lot more critical. And you're finding that the home inspectors are starting to understand that they can now kind of, if you will, unearth or turn up things that maybe in the past they didn't want to, because they didn't want to put the buyer in a situation in which the seller said, hey, listen, no, I'm not going to do a thing. Now I think that the buyers are starting to recognize that if they're paying top dollar for these properties, because we're still seeing prices increase,
Yes,
right?
for sure.
So we're starting to see that the buyers are expecting so much more. So if you're getting ready to put your house on the market, as we've advocated for a long time, make sure it looks its best before you do so.
Yeah, bottom line, the prices are still high. They're maintaining higher prices for selling of a home. And even in the report, it was an interesting note that they said that the cost of gasoline and the cost of shelter, which in the consumer price index is actually cost of rent, not the sale of the homes.
Right.
But those two factors contributed to 70%.
Isn't that amazing? I mean, 70%.
70%, just gas and the cost of shelter.
Yeah.
Those two is what has the inflation so high.
Kind of like in our society today, almost the two essential portions of our lifestyles, right, make up 70% of this increase that we saw.
Yep.
But as always, we really appreciate you tuning in. We hope the information and the material that we cover is meaningful and is educational to you. And we'll continue to keep up with this. Two big reports that are coming out on the same day.
That's right.
On June 12th will be the CPI report at 8:30 in the morning. And then Fed Chair Jerome Powell will make an announcement with regard to the Fed's decision with regard to, interest rates, whether they'll go up, whether they'll stay the same, the same old thing, or will they come down?
Yeah.
There's a lot of anticipation that it won't change, that we'll probably be now seeing a change perhaps later in the summer. But who's to say? We stopped predicting a long time ago.
I'm glad you said that.
So again, thanks for tuning in. We'll hope to see you real soon.
Yes, please. And if you have any comments or questions you want us to answer, put it in the comments below.
Yeah.
Till next time.
And never be too bashful to subscribe to our newsletter.
Please. Thank you.
Take care. See you soon.
Bye.